Hello, and welcome to another day of TA the Degen Way. I just wanted to hop on and do a quick update on the Bitcoin chart and some of our upcoming trading ideas. I don't have any trading ideas posted for Bitcoin aside from our macro levels. If you'd like to see some of that stuff, head on into our free Discord, where I'm sure we're talking about Bitcoin quite a bit. But just looking at some of the local price action, a lot of people have been extremely bullish for good reason. You got this nice bull pennant that formed that broke to the upside. But as you can see, we're kind of breaking down on that. Price has pulled back once again into the golden pocket, kind of rejecting off of this value area high. If we look at the volume profile here of this flag that's forming, basically it's just gotten bigger, see, it's almost got kind of a V pattern to it. Most of the volume towards the bottom side, which I find to be bullish. And if we look at this, I kind of expect to bounce off of this wick and possibly just continue to the upside. That's certainly a possibility. We had some nice volume in this push to the upside and back on down, where we have basically put in a some kind of a reversal bar. If we're to look at a higher term time frame, this is the hourly, where the high is above the previous high and the low is below the previous low. Now putting that in with a double top at the value area high with a lower high here, I don't find to be the most encouraging thing in the world. And let's just draw a trend line here. Basically, what I see is this pennant's just getting larger, even though we had a pennant, brewing in here. I don't trade these patterns very often. I don't mind scalping off these levels, but they just don't. Retail trading patterns, if 95% of traders go to zero, retail traders that is, well then what 95% of retail traders are doing doesn't work, this just isn't enough. Just taking this pennant and slapping a flagpole on it and expecting that to play out. It might. You can look back on your chart, here's a reverse head and shoulders. Looks like it played out quite well, reaching its target area, probably up there. We don't include these wicks. It certainly did. Go to the line chart where it's just showing the close prices, or with forecasting is always more accurate. The close price, a candlestick doesn't really mean very much until it actually closes. So what it closes at always has great significance. So now let's take this neckline here, which is giving us a target of, I can't even read it. Target of 34,867. And then now if we turn on our wicks, look at that. hit that target to the money. But the target wasn't taken from using these wicks. It was taken using the close prices. So for forecasting, it's just far more accurate. So what do we got here now? Now we got a range forming on top of this range. So I see this entire upper price action range. Excuse me, I've had a terrible cold. We could split it into two. Here's the lower range. You can see, let's get rid of our volume profile here. Here we got resistance. Here we got support. Here it's resistance, resistance, support. So to me, this is a pretty obvious trading range. And when price comes into it, we'll probably expect or respect the levels that are inside it. I'd say that's probably its high. And now let's grab this and pull it to the downside. And there is your lower trading range, you know. So for me, I mean, if this trend was to hold and we were just to build out a big, massive bull pennant, I mean, there's possibly a long position to be had from here, taking it back to this 50% line. And that would be just trading the range and trading the, I mean, kind of the pattern that would be emerging there, which would be this kind of, you know, head and shoulders type thing. I personally wouldn't be taking this. Me, I would be looking for, I know there's a lot of stop losses below these lows. The low of the range is pretty much down there. And if we were to take this box, double it one more time, let's see, it corresponds with that low right there. Let's drag this down. Pretty darn close. Pretty darn close. So for me, I mean, I would be looking to take some kind of a scalp long based off of these lows and the volume profile, where we can, if we just take these average range sizes, that gives us another range about right there, kind of matching this low, this low, this low. I'm sure you get the point. You can just visualize some equality here. What do you got here? You got some consolidation just below it. Seems like a good level. Why does your fib work? You know, why does a 50% retrace, say the golden pocket, 50% to 61.8 even work? Well, because market's moving ranges that are of relatively equal size and value percentage-wise. Hence the use of the log scale. You know, I'm mapping out the change in percentage of value. I don't care about the change in dollar. I mean, if something that's $1 goes up by $1, it went up by 100%. That's insanely significant. If something that is worth $1,000 goes up by $1, well, I mean, that's like 0.1%. I mean, it's nothing. So, I mean, the change in dollar value doesn't drive your trading decisions. It's the watching the P&L go up, you know, or the P side of the P&L. So for here, I'm kind of looking for, you know, either a continuation to the upside, possibly a short trade here, you know, possibly. I mean, it just depends on, you know, if we were to pull up the oscillator and get some serious bearish divergence there. I mean, what do we got coming on the hourly? We got nice curvature to the upside. Money flow is kind of about coming down to the red, but if we're in some serious raging pumping market where we're not even going to fill this gap back to 32K down there, which may be the case, a lot of people are getting FOMO and, you know, starting to long inside this flag thinking that they're going to miss it, and that very well may be the case. If we're in a power pumping uptrend, we would spend a lot of time in the green and a very little time in the red. So if we follow the curvature of this right here, I mean, that's looking pretty good. This right here, I mean, it's kind of there. Not quite as strong. I mean, we got some nice curved action to the upside. But we also have money flow. The whole time that we've been here has been trending downward while price trends sideways. If we were to go on like coinalyze.net and look for CVD divergence at, you know, on the higher time frames, you know, my guess is there's still it's probably still positive, but trending to the downside. So for me, I would be looking for a possible scalp long trade going off of the volume profile, kind of down in this 33.5 to 33.2 area, kind of right in there, kind of, you know, these lows. And what would I be looking for? I would be looking for this trend to come down and exhaust itself. Look at these lows. See the curvature of that? You know, and then looking for a nice big wick. You know, I mean, this is the hourly. I'd be coming down on the smaller time frames and looking for price to consolidate, make a little itty-bitty consolidation range, break above it, pull back, and bullishly bounce off of that little consolidation range, and the win rate on that is extremely high. If it's in a good spot, like down here. I mean, what do we have down here to prompt price to push up? And I'm not even talking about trading this to 39, 40K. I'm just talking about a scalp long. Well, down here we have everybody's stop losses, and we have a significant level at the low of the range, with a pretty healthy size gap down here. Now, if we're talking about swing trades, unfortunately, the entry for a swing trade, I am not a swing trade buyer in this leg. No way. Swing trade buyer is way, way, way back here. Way down here. Back in this little bowl, in all seriousness. As soon as it broke up and pushes up a little bit, that's the time to add. Then you come up and potentially put in a right shoulder, which we didn't. And if we don't, well then, you add. This is our previous high from way back here that we finally broke out of at about 32K. We got 31.8. So the break of this in the first retest on the small time frames would be a fair spot to add. Or maybe at this low. That doesn't mean that price isn't going to go up. It very well may. See how these here almost line up just like a grid? Price likes to trade in equal ranges. I'm a buyer in this range down here. Then I'm a buyer because I'm buying for the sole purpose to get a clearance fire sale discount where buyers have over discounted the price versus a certain amount of time, and we know there's pepped up demand so that it can be sold back to them at a higher price. But for a scalp long, if price comes up here and puts in some kind of a right shoulder, here you got, a reversal trend or a reversal bar. If we looked at like a 4-hour, probably a 12-hour, we'll just look at it. The high is higher than the previous high, and the low is lower than the previous low. See that? Look at this candle right next to it. This low is lower than this candle's low. This high is higher than this candle's high. It's an outside bar. It could be a possible reversal signal. But it doesn't mean it's just going to dump straight down. Let's look at our oscillator. What do we got forming on the oscillator? Obviously, bearish divergence. We had some nice trigger waves moving up, but you can see these here are kind of turning a little turn to the downside. If we follow the curvature of this would be the top in the momentum cycle. But we could get another big rip, where we get some even more serious bearish divergence and price doesn't start to trend down until we start to print some trigger waves to the downside, but on the upper half of this oscillator. And then start get some deeper ones down here. So on the macro side, it's a little mixed. Sentiment says it's buy time. That's certainly for sure. There's definitely some serious demand. Looking at this 12-hour, that outside bar could very easily bring it down to the bottom of this pennant. Where would this pennant actually cross? I never expect price to stay in these pennants as long as until they cross. But where they cross, for some reason, always seems to be a significant level. Why? Well, that's because here's the top, here's the bottom. If this is a nice, perfect pennant, the middle of this should be 50% of the range. It's literally just that stupid simple. So for me, I see a couple trade setups, possible short if price comes up and puts in a right shoulder and on a smaller time frame. Here we got nice neckline right there. Here's your left shoulder. Here's your head. Price would be pushing up. for your right shoulder. It's already set itself up for a nice ABC measured move. Measured move brings you out to about these lows, which would be a good, pretty fair spot to expect some kind of a rejection. So let's say price starts to consolidate here. You see it start pecking away, rejection, rejection. You keep getting wicks with a nice, size healthy candle to the downside that finds support, at this price right here. It sitting here, boom, 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 and then starts to trend to the downside. Well, then it becomes a lot more likely. And if you look at this 5 minute, you can see this oscillation right here. You'd have expected it to bottom right here, kind of like it did right there. And money flow is pushing back up into the green, so we're expecting this trend to come on up. But if we, just sit here and jones around and don't ever break out and start to trend to the downside, well, then this head and shoulders becomes a lot more likely. You got a potential short trade, stop loss above the high. You could target, you could take your hourly or your 15 minute, switch to the line tool, grab your target, and we can just figure out what it is right now in all seriousness, because this is a if this then this. So let's say that we take that high, and we take that, and that brings us right down to the bottom of this rising trend line on this pennant, which, this here probably wouldn't be a bad spot to fire off a scalp long and maybe only target 50% of the range. De-risk, stop loss to entry, close half of it, and if it runs, it runs. That's where I'm at on Bitcoin. If you want to join us in our Discord group where we're talking about this kind of stuff all day, there's a link in the description. We'd be glad to have you. If you head on over to CryptoFile 622 on TradingView, CryptoFile 622. Looking at some upcoming long setups on OP, Injective, Solana, CFX, FET. STX actually came down into that buy window just ever so slightly, and already took a partial entry on that. Got to hit play several times just because this is from a few days ago. A lot of early enters on STX as it's kind of looking super bullish, and I certainly don't disagree. But I think this is going to be the real bottom, to come down into the 61.50 area, or possibly even 61. Maybe we get another drop here. But why? If you follow the curvature of these lows, this is a come on. This is a trend to the downside. Right here, follow the curve. This is curving, losing momentum. You would expect it to bottom out somewhere around 61, 61.50. So, I've taken a long position on this down here, looking to dump half of it. Pretty much at the current price. In all seriousness. This stop loss goes to entry. That is a risk-free position at that point. Your money's made. And if it runs, well, yay, and amen. But that's all I got for you today. Until next time, trade well.